Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the bears gathered in more significant numbers and continued to pressure the downside and eventually cracked the level of 69 cents and posted a fresh 5-week low of 68.94 before retracing slightly. Today, China and the US start their talks and the market will be keeping a very close watch. Along with that is we've still got a huge amount of economic and risk into this week, starting with the China manufacturing PMI and along with Australian CPI tomorrow. And then on Friday, we got non-farm payrolls and also the Australian retail sales. But more importantly is the fact that we do have, other than the non-farm payrolls, is the US Federal Reserve meeting, which is starting today for 2 days, and then we get the decision at 4 a.m. Sydney time on Thursday. It is anticipated they will cut rates by 25, but it's more about the statement. If the statement is very much to a hawk, then we could see the dollar rally and therefore see further pressure on the downside. At this present stage, my call is still towards 68.90 to 68.45.55 and reassess from there. Resistance seen at 69.45, and still if you're trading short, continue to lower your stop losses in accordance to your risk management, just in case we get a sharp knee-jerk reaction to the upside. The euro still remains pressured, but not too far away from its target of 110.90, and underneath there we could see some buying interest. The reason for the fact is that the dollar index is getting very close to the top side of the range, and we could see any sharp or maybe a turnaround. So just be aware if you're trading, and like the Aussie, continue to lower your stop losses. Resistance is at 111.7080 for the time being. Dollar yen has pushed higher and now closer to the objective of shortening this market, anywhere from 109 and beyond to 109.50, and looking to add short positions. It is assessed that markets should reject from there and look back to the downside around 108.20 to 107.70. Well, the pound continues to remain bearish and crushed the level of 123.50 overnight and posted a fresh 28-month low of 122.11. It is assessed that further risk to the downside is seen and the target holds at 121 figure 50 and reassess from there. Resistance seen at 122.55. The gold outlook still at this stage is holding around familiar levels of 1,420 and at present could still see a drop back towards a level of 1,400 with a base at 1,395. But the market may find a little bit of difficulty towards 1,433 because that was a rejection before. So I still hold the risk into the next 24 hours of a slightly softer stance. Oil surges overnight of 1.5%, but still not quite out of the situation that supports a further case to the bull unless we break $58 a barrel. Above there, views towards 60 to 62 and a base seen around $58 a barrel. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the Insta report and hope you enjoy the great start to this new day.